if what happened at that point in time would have been accompanied by uh, a liquidity squeeze, a market event like 2008,
Mhm.
it would have been game over. If you would have seen credit restricted in the futures market against good delivery failures uh, in the cash market, it would have been game over.
Shortly before that happened, let's say between SilverSqueeze and that summer, there was a report from the LBMA. I think it was in April of that year. They mentioned had the demand continued at that pace, that they were weeks away from running out, which I certainly took notice of that statement. So, based on what you're saying, are able to venture any sort of feel for how close do you think back in 2021 when this was happening? You said eventually the in London they were able to fill what you needed. Are you able to get any idea of how close we actually might have come to a break point back then?
Not a clue. If what happened at that point in time would have been accompanied by uh, a liquidity squeeze, a market event like 2008,
Mhm.
it would have been game over. If you would have seen credit restricted in the futures market against good delivery failures uh, in the cash market, it would have been game over. Now, understand that you wouldn't have had a short squeeze like you have in a fair market. The LBMA would have declared something called force majeure, and they wouldn't have demanded settlement in silver. They would have cash settled. And the exchange, would have determined the cash settlement price, just like they did in the tin market. So part of the premise around the silver squeeze, which suggests that we had a fair market in silver, that the exchange isn't controlled by the dealers in the exchange, is false. That notwithstanding, people would have made a lot of money.
Yeah.
Understand, too, that the failure to deliver didn't reflect overall physical inventories in the silver market. It involved good delivery, silver, the silver that is the stuff of the paper futures, and the inventory that is required for responsible investment vehicles like Sprott Physical Silver. Over time, if institutional demand and retail demand for silver continues, what you will see is a dishoarding of informal silver, uh, silver held by living, breathing human beings in the Middle East and in South Asia, and the reintroduction of that silver into the formal system, provided it doesn't happen all at once, provided it happens over time. Uh, and I think that this process probably accelerates. You're seeing a conversion of informal silver to formal silver in China, as an example. Uh, I think really the possibility for a cataclysmic break really has to do with how rapidly the market would be challenged. We were a catalyst that challenged that market, Chris. And to be honest with you, a fairly small catalyst. The fact that $1.5 billion or $2 billion in net buying had that dramatic an impact on the physical good delivery silver market let me know just how leveraged the futures market was.
Well, I sure hope you've been enjoying this video series with Rick Rule about the Silver Squeeze and a look behind the scenes of some of the stunning things that happened. And let me just say that if you've liked the ones you've seen so far, you are definitely going to want to see what's coming your way right now, where he talks about why he sees an eventual breakage as a matter of when rather than if. And that one's coming your way now.